XRP just did something that Bitcoin could not do for 7 straight weeks in a row, and almost nobody outside the trading desk noticed it happening. While Bitcoin ETFs bled more than $400 million in a single session and slid to their lowest price since October 2024, XRP ETFs quietly posted 0 outflow days for an entire week, not one red day. 8 weeks straight of net inflows, with the latest week alone bringing in nearly $23 million. Bitwise's XRP fund led the pack, pulling in over $11 million in a single day. Franklin Templeton added almost $4 million more. While every major coin in the market was getting sold off, institutions were still quietly buying XRP through regulated funds. So here's the question everyone is asking right now. If the institutional money is flowing in, why is the price still sitting around $1.04, down about 20% in the last month alone? The answer is not what most people expect, and it is not because anything went wrong with Ripple or the XRP ledger. In fact, June was one of the busiest and most positive months XRP has had all year. Network activity exploded, with active addresses jumping 72% in just 2 weeks. Ripple's engineering team kept shipping, and yet the price kept falling anyway. That disconnect between strong fundamentals and a falling chart is exactly what has traders confused, and it is exactly what we are breaking down today. Let's start with the elephant in the room. Bitcoin dropped below $59,000, its weakest level in nearly 2 years, and when Bitcoin falls that hard, it drags the entire market down with it. Ethereum fell, Solana fell, BNB fell. XRP is no exception, and historically XRP tends to fall even harder than Bitcoin once fear takes over the market. That broad sell-off, not anything happening inside Ripple's own ecosystem, is the real reason XRP slipped to its weakest level since late 2024. But here is where it gets interesting. On the charts, XRP is sitting right on top of a make-or-break zone. The $1 level is the line in the sand. Analysts are watching the 90-cent to $1 support zone closely because the most recent local low bounced almost exactly off $1, and that is being read as an encouraging sign of short-term stability. On the upside, resistance sits around $1.13. If bulls can reclaim that level convincingly, the recovery narrative gets real. If they can't, some technical models are pointing toward a drop as low as 85 cents before buyers step back in. Now let's talk about the story that could actually change everything, and it is not price action, it is regulation. The Clarity Act, the bill that would permanently classify XRP as a commodity under United States law, instead of leaving its legal status hanging in uncertainty, was supposed to be a major catalyst. The market had circled July 4th as a target date for the White House to get it signed. That is not happening. The Senate left for the holiday recess on June 29th and will not return until July 13th, and leadership has already said the first week back will be dedicated to the defense bill, not crypto legislation. That pushes any Senate floor vote on the Clarity Act to late July or possibly the first week of August at the earliest. Here's why that delay matters more than most headlines are letting on. Right now, every piece of good news coming out of Ripple, every partnership, every network upgrade, is doing almost nothing to move the price, because none of it creates new direct demand for the token itself. The spot ETFs are the one exception, because when money flows into those funds, the issuers are legally required to go out and buy actual XRP on the open market. Everything else, no matter how bullish it sounds, is mostly noise for the price chart. A real shift in the legal rules is the one thing that could flip that switch, and that is exactly what the Clarity Act represents. Speaking of Ripple news that sounds bigger than it actually is for the price, let's talk about the OpenUSD stablecoin. Ripple has just joined this new dollar-backed stablecoin initiative alongside Visa, MasterCard, Stripe, BlackRock, and more than 140 other companies. On paper, that is a massive vote of confidence in Ripple's infrastructure from some of the biggest names in global finance. But here's the catch that a lot of retail investors miss. Most of Ripple's 300-plus banking partners actually use RippleNet, which is Ripple's messaging and settlement technology, not the XRP token itself. They move value through the network without necessarily touching XRP at all. So when you see another headline about Ripple landing a huge new partner, ask yourself the real question. Does this partnership actually require buying XRP, or is it just using Ripple's plumbing? That gap between network growth and direct token demand is the single most important thing to understand about XRP right now, and it explains why the price can lag behind the news. There is also a technical story unfolding under the hood that long-term holders should know about. XRP Ledger co-founder David Schwartz just unveiled a new transaction reservation scheme designed to stop front-running on the decentralized exchange built into the ledger. Front-running is when someone sees your trade coming and jumps ahead of it to profit at your expense, and it has been a persistent trust issue on decentralized exchanges across the entire crypto industry. If this fix works as intended, it strengthens the case for XRP Ledger's permissioned, decentralized exchanges and lending protocols to be used by serious institutional players who cannot tolerate that kind of manipulation. Combined with the AI-assisted security overhaul Ripple rolled out earlier this year, and the rebrand of the core server software from Rippled to XRP LD, this is a network that is clearly being hardened for enterprise-grade use. It is not flashy. It will not pump the price overnight, but it is exactly the kind of unglamorous infrastructure work that separates a coin built to last from a coin built to hype. And then there's the drama that actually got people talking this week. Ripple CEO Brad Garlinghouse publicly criticized Michael Saylor's Bitcoin-only strategy, reigniting the long-running debate between coins built for utility and coins built purely as a store of value. It is a clash that goes right to the heart of what makes XRP different from Bitcoin in the first place. Bitcoin's entire pitch is scarcity and holding. XRP's pitch has always been speed, low-cost settlement, and actual payment utility. Garlinghouse doubling down on that distinction publicly signals that Ripple has no intention of pivoting away from its core use case, even while the broader market rewards Bitcoin's simplicity in the short term. So where does that leave XRP holders in the UK and the US heading into the rest of July? Here is the honest picture. The price is stuck in a tug-of-war between a broad crypto market that is still deep in fear and a set of fundamentals inside the Ripple ecosystem that are genuinely improving. Network activity is up sharply. ETF inflows have now outpaced Bitcoin for 2 straight months. Security and infrastructure upgrades are rolling out steadily. And yet none of that has been enough to overpower a market-wide sell-off driven by Bitcoin's slide and growing uncertainty around the Federal Reserve's next move on interest rates. There is one small silver lining worth mentioning. July has historically been XRP's strongest month of the year, averaging roughly a 10% gain over past cycles. But with the market still sitting in fear and the Clarity Act vote now pushed back to late July at the earliest, that seasonal pattern is far less reliable this time around. Even if the bill does eventually pass, most analysts expect it would trigger a short relief rally rather than an immediate sustained trend reversal, at least not until the wider crypto market finds its footing again. The bottom line traders are watching right now comes down to 2 numbers. Lose the $1 support zone and the next stop could be as low as 85 to 93 cents. Reclaim $1.13 convincingly and the path opens toward $1.25 and beyond. Everything else, the partnerships, the stablecoin news, the technical upgrades, matters for the long-term story. But in the short term, it all comes down to whether buyers can hold that line. Make sure you're subscribed because the moment that Clarity Act vote gets scheduled, or the moment XRP breaks out of this range in either direction, we will be the first to break it down for you.